Hi, welcome to Reports. Today we will learn how to prepare reports in good financial standards. The best way to learn how to do reports is just through practice. Reports have a method somewhat, but the best way to do it is just through practice and memorization. And after you sit down with your homework a couple of times and do these, I think you will learn that they will come easily. The first place we're going to start is with the trial balance. As we prepare the trial balance, we bring in our assets, our liabilities, owner's equities, revenue, and expenses. The best way to prepare a trial balance is in this order. You'll notice that I have capitalized and highlighted the first letter of each word so it spells the word Alor. Now, Alor is a village in India. It really has no meaning with accounting, but I promise you that you'll probably remember the word Alor after this, and you'll remember to bring your assets, liabilities, owner's equity, revenue, and expenses into your trial balance. After the trial balance is prepared, we can begin to create our reports that we need. We will start with the balance sheet. On the balance sheet, the first thing that we bring in, usually on the left-hand side, is our assets. Our assets include such things as cash, accounts receivable, inventory, equipment, etc. On the right side, we'll bring our liabilities in and our owner's equity. Now, if you look at this balance sheet right here is the accounting equation. Assets equals liability minus owner's equity. Now, if we apply what we have learned with our debit and credit T account module, we can see what each of these accounts have. So if we look at our assets and we look up in our model, we can see that assets have a debit balance. So we would bring in all our assets with a debit balance. Now, our accumulated depreciation is considered a contra account. The way I remember contra is to remember just the opposite. So if our asset, which is equipment, has a debit balance, our contra account would need to be a credit balance. So we would bring in these accounts this way and total them up. The next side, if we look at our liabilities, we can look up in our columns or in our diagram, and we can see that liabilities have a credit balance. So we would bring in all of these balances, accounts payable, salary payable, unearned service revenue, with our credit balance. Last, we have our owner's equity section. As we look at this, we can look in our chart again and we can see that our common stock or our owner's equity has a credit balance, and that our retained earnings has a credit balance, which is also considered owner's equity and is the O in our CLOR acronym. If we look at dividends, we can see that that has a debit balance. And finally, our net income, as long as it is income, would have a credit balance also. If we had a net loss, it would obviously be a debit balance. Now, as we total this up, our total assets always have to equal our total liability and owner's equity. This goes back to the accounting equation. And right here, if your assets do not equal your liabilities minus your owner's equity, then you have created a mistake, and you need to go back through your trial balance and figure out where this mistake has been created, or maybe it's just an addition error or a transfer error. The next report is statement of retained earnings. On the statement of retained earnings, we need our owner's equity as the title, and we start with our retained earnings from the last financial statement. So if the last time we prepared financial statements was March 31st, we would bring in that retained earnings number. Next, we need to add any net income that we have received since our last financial statement. Then we need to subtract dividends that we have paid, and that will give us our new balance. So if we bring some practice numbers in, on March 31st, we had $1,000 as our retained earnings. Through the second quarter, we earned a net income of $30,000. We paid out dividends of $5,000, and so our new January 30th balance is $125,000. Then we're on to income statements. Income statements include revenue. You always want to put the positive numbers at the top, meaning revenue should always be your positive, and then you want to show all of your negative numbers or your expense. So we will bring our expenses in, such as advertising expense, depreciation expense, rent expense, etc. And then we total these numbers and we calculate our income tax expense based on the income we had made before taxes, and we would have our total net income. Now if we show some examples of this, we earned $100,000 in income. We had expenses of $60,000, and notice how the individual expenses are listed on the left and then totaled on the right with a line underneath it. Each time that you put a line underneath something, that means that you have made a mathematical calculation. So you can see that 100,000 minus 60,000 equals 40,000. And that is our income before taxes. If we look this up, we can see that we will have $10,000 of income expense. You can see there's another single line, so we have 40,000 minus 10 equals 30,000. The double line at the bottom means that you are done with your calculation. So anytime you see a double line underneath a number, you know that that is the end number of the report or the end number of the calculation. Now if we come back to the summary of our allure, we can see that we've talked about assets, liabilities, owner's equity, revenue, and expenses throughout these reports. Now even though this is the way to bring them in on the trial balance and the way I taught you in order of the reports being created, I would create the income statement first, because as you create the income statement, you calculate revenue minus your expenses and you find your net income. Now these numbers will then need to be transferred to the statement of retained earnings. So you can take your net income, you can take your previous retained earnings plus your net income minus your dividends, and remember we just calculated net income on the revenue and expenses, and then you can figure out your new statement of retained earnings. Last, I would create the balance sheet because the ending retained earnings numbers needs to be transferred to the balance sheet to provide this information. So this is an acronym, and if you're a visual person, you can come back to this and look how to create the trial balance and then think to go backwards to create your financial statements. I promise you that as you practice and as you go through this slideshow many times if you need to, that you'll be able to understand reports. Once again, reports is not something that just comes. It has to be practiced, it has to be memorized, it has to be learned. Thanks for visiting this session on reports.